Hi, my name's Chris Tubby. I'm founder of Trading for Tomorrow, and here I'll just do a couple of YouTubes. One is on the macro outlook, and the other one is a technical analysis on a few of the sort of products that I trade. So let's start with the macro outlook for this coming week and month and so. Okay, before we get into the actual macro part of it, I just want to talk about this sort of recent Microsoft outage that obviously was caused by this cyber security update. And of course, that impacted so much software. It created the most serious global outage to date. Now, for me, that opens up dangers because, I expect some countries, certain countries, will be trying to sort of replicate that for future cyber attacks. And the companies, the big companies, Google, Microsoft, and some of the others, Apple, etc. They sort of really need to be on the top of their game to stop that. And of course, these cyber security companies need to be protected too. Especially from being taken over by foreign investment companies that might be partially owned by countries. And of course, because they could then use that technology against rather than to protect. So I just thought I'd throw that out there. Okay, so of course, sort of when we look at what's happened with tech over the last week or two, partially because of that and other things, I guess, it could have been the nucleus that has caused this stock rotation with investors sort of moving out of the big tech and some of the AI companies and into either AI startups, where maybe they feel that they're getting better value, or small cap stocks. And as I say, maybe they're just seeking to get better value for their buck. So stocks did manage a recovery on Friday though after PCE data came out. It was close to expectations, and especially now we can see the potential for a Fed rate cut. So my question now is, would they dare to do that this Wednesday before the summer recess, or are they going to wait until September? Now, if they wait until September, and the data remains sort of showing that inflation is improving and moving in the right direction, of course, plus unemployment, which we'll see this week, especially on Friday after the Fed meeting, keeps moving higher. It's gone from 3.4% to 4.1%. Much more than that. And, the sort of, when you look at that particular ratio, it's sort of saying that they're heading for a recession, which I don't believe, but I do think that they are sort of slowing down for sure. Then, come September, it wouldn't surprise me to see a 50 basis point rate cut. Now, I'm probably the only one that's saying that, but, that's in my mind for sure. If they feel that they're behind the curve, look at what they did when, they had to start hiking rates. So it could be sort of a bit of a knee-jerk reaction to try and stop the economy from starting to weaken too much. But then we're still getting mixed signals. We see GDP come in stronger than expected at 2.8% year on year, which is double what it was in the first quarter. And this sort of shows that with some of this data, it's possibly lagging. I do see consumer spending weakening, and that's just purely because of high prices, I believe. But of course, that's ahead of the election. Now, gold dropped over $100 from its recent high. The dollar itself recovered a little bit, and oil dropped back below $77 for WTI on Friday, which again, that should start to help inflation, or lower inflation, shall I say. Now, although global trade volumes are increasing, and that's despite sort of all these geopolitical issues and things that are going on, competition, protectionism, however you want to phrase it, Europe still seems to be lagging behind the US and Asia. And of course, that's going to have other pressures. So we're seeing that container costs were boosted. And of course, remember, about 80% of global goods are shipped by sea. And of course, the Red Sea and the Suez Canal remain a challenge with the Houthi attacks. and you know, that's just making many of the ships avoid the shortcut, which again makes it more expensive and it takes longer to transport those goods. Thankfully, the Panama Canal is almost back to normal. Restrictions are being lifted there after low water levels. And of course, that had prevented some of the biggest ships from using the shortcut. But this is starting to lead towards port congestion. And, you know, we shouldn't ignore the other impactors such as strikes. There's a couple going on in Germany or about to. And of course, you know, as I mentioned, these geopolitical issues, wars, etc., and weather issues as well. You know, these extreme weather conditions that we're seeing, you know, with temperatures increasing year on year at the moment. I think, you know, it's got to start having countries reconsider the crops that they're growing or what they can grow. Now, moving on to the US election, it seems now a much tighter competition. It looks as though it's going to go to the wire. Harris seems to be offering a much stronger challenge to Trump than Biden would have in the November election. And you know, I've been posting for a while that voting for Biden was possibly a vote for Harris anyway. You know, whether he was going to suffer sort of physically or mentally, you just couldn't expect the guy to finish another full term. But now she seems to be the Democrats' nomination. And of course, Biden and Obama are backing her as well. And donors and potential voters are growing. You know, she may sort of attract a broader range of voter. You know, obviously from the black community, the women, and the younger voter. And of course, there must be a temptation to elect the first woman president. After Clinton failed to do that against Trump in 2016. You know, it's amazing, but Harris has raised over $200 million in 1 week. Now, Trump actually went to a conference, well, an event, a crypto event, and that sort of gave Bitcoin a rally over the weekend. With some of the comments he was making if he was re-elected, you know, perhaps about reserve Bitcoin within the, I don't know, I suppose somewhere within the government, and other things. To be honest, didn't look at it too tight, but you know, Trump's Trump. And the ETH ETF was launched last week too, and that seemed to go fairly well. So, you know, I wouldn't take this week's Fed meeting as a boring affair. You know, just oh, it's this one before the summer recess. I think there is a slight chance that they could cut rates, or at least confirm a rate cut in September. Now, obviously, that's going to depend on the next bout of data. So, but you know, we've got to wait and see. I suppose also, you know, we've got to consider that the Bank of England is likely to cut rates in August at the moment as well. So, you know, all the central banks want to cut. It's just a matter of having the right criteria, the right data to support that. And of course, you know, last week China surprised with a couple of rate cuts, you know, short and longer term rates, because they're still attempting to boost their economy. And obviously that's been a bit of an issue for them because of the housing situation. You know, they're just so long of homes that they can't shift, which impacts local government debt as well because it's all linked. You know, wouldn't it be wonderful if we could have all those homes in Europe and the UK? I mean, it would definitely ease the housing crisis that's been seen there for way too long. And then, you know, I suppose part of what China's doing there seems to be that you know, I don't know whether they are or not, but they seem to be trying to copy Japan's yield curve control. You know, when you look at their 10-year, it's fallen to a record low of 2.17%. Okay, so moving on to what to expect this week. This week, we're going to see more earnings reported, so watch out for them. There's a lot of data coming out from the US. We've obviously got all the employment data coming out, so we've got JOLTS, ADP, then of course we've got the FOMC meeting Wednesday. There's also PMI, ISM, and then of course on Friday after the Fed meeting is NFP. I do focus on the average earnings and the average hours work because they're the inflationary elements of the data that comes out. There's also consumer confidence, housing data, durable goods. Remember, durable goods are the bigger ticket items, although I would say that a lot of that now is probably being bought on the buy now, pay later deal. So, you know, just don't read too much into that. So there's a lot of stuff coming out from the US for sure. In the Eurozone, we've got GDP, CPI. In UK, we've got housing data and obviously the Bank of England rate decision. Could they actually cut? And if so, by how much? In Germany, we've got GDP, CPI. And then, you know, there's other, so it's quite a big data week. I mean, Canada's got GDP, Australia CPI, China's got CPIs as well. India's going to release its fiscal deficit. Japan, you're going to get unemployment, and of course they've got their Bank of Japan meeting. Now there is potential there for a rate hike going in the opposite direction as usual, and a reduction in bond purchases to help support the yen's recovery. You know, a weak currency is dangerous because, you know, you're importing inflation to start with. Now, just remember, I've been talking about this last week or so, just remember holidays are now, you know, lots of traders are going to go on holiday with their kids and family. And of course, that's going to reduce the volume in the markets, but that generally increases volatility. So, you know, just be a little bit cautious, you know, perhaps cut your size down, wider stops, but all of that, do it with the right ratio to make sure that you're not increasing the potential loss. And that just leaves me to wish you to have a great week. And again, just remember, it's the end of the month as well, so you might see a little bit more sort of stock things going on, you know, rebalancing and such like. So there's another couple of slides to come, and then I'm going to move on to my technical analysis.
Now, I just want to sort of just talk a little bit here about my services that I offer. So there's a daily newsletter that includes global news, headlines, my views, full articles. That is a subscription service. There's one-day workshops. You know, this will help you to discover if trading could be your next career or even just a second income. Otherwise, you know, maybe you're already trading, but you know, there's a few gaps that you'd like to fill in, and I can help you with that because that will accelerate your trading and your performance. And then there's a 1 week intensive course. You know, that's going to make you feel competent and confident after just 1 week. It's going to give you those foundations that you need to build your trading career on. And, you know, if you've got that in a trader, we'll find it. And now that does also include a free trading challenge. Then I do a Flexi Masterclass, which includes 6 weeks of guided learning. They can be split up, you know, you don't have to take them all at once. And this is designed to provide you with all the knowledge and trading tools that you're going to need to navigate any market and also on any asset class. You know, I trade them all. And as I say, you know, you can spread those weeks out over months if you need to. It's no problem for me. And again, that does include a free trading challenge. Now, trader mentoring, I'm doing more and more of this. And, you know, this is to help you reach that next level time and again. And, you know, I'm doing much more in the way of one-on-one sessions right across everything that I'm doing now rather than sort of looking for big groups. I do provide a lot of trader educational content to individuals, exchanges and brokers. And as you know, as I mentioned earlier about the trading challenges, you know, if you're looking for a funded trading account, then, you know, you can contact me for details just about the ones that I use. or you know, you can sort of take one of the courses where I'll give it to you for free at the end of it. Okay, so then moving on to our disclaimer, just to make you aware that trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. And many companies provide leverage, so just be aware that you can lose substantially more than that initial investment. Everything I include in here is just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, you know, before you make that decision, you've got to consider the risks involved, definitely your financial situation, your level of experience, and your risk appetite. And of course, it's important that you only risk capital that you're prepared, but also that you can afford to lose. And if you've got any doubts whatsoever, seek independent financial advice and do that before you risk your capital. So many people come and find me after they lost money, which is sad. You know, they should come to me before. And yeah, so listen, that's it for part one. I hope to see you in part two, where I'm going to do some technical analysis.